Welcome to another edition of Focus on Alternatives, sponsored by ADISA, the Alternative and Direct Investment Securities Association. For more educational content like this, please check out the resource library at adisa.org. My name is Greg Mausz. I'm your host today. I'm joined by Gael Ragone, President of Carter Funds. Thank you for being here, Gael.
Thank you for having me, Greg.
So my first data center tour, circa right around 2010, was actually with part of the team from your company. Really neat experience, downtown Atlanta, seeing the facility, the infrastructure, the security, really amazing experience. So really glad to have you here talking about data centers. I know you and your team have a lot of experience, so you're the right guest to talk about this. So laying the groundwork, can you go ahead and walk us through kind of what are data centers?
That's great. And I have to say that data center is one of my all-time favorites, so I'm really glad you were able to tour it. There are four main types of data centers. Each are serving a different type of need. We have enterprise data centers. Those are typically privately owned by large companies. For example, JP Morgan Chase, Walmart, ExxonMobil. In one of our portfolios, we even have FedEx. And those are typically used to store and manage the company's own data. Co-location data centers, or colos, they're a little bit different. They're much more like apartment buildings, and those are servers where multiple businesses are able to rent space instead of building their own data center. It's a much better capital stack for them, and typically makes much more sense for their business. Companies like Equinix and Digital Realty are the top players in this market. We also have cloud data centers. Those are typically operated by large tech giants like Amazon Web Service, or AWS, Microsoft Azure, and Google Cloud, and those allow businesses to rent computing power instead of owning the physical hardware itself. We also have edge data centers. Those are smaller, localized data centers, and those are typically positioned closer to users, and that reduces the latency for applications like self-driving cars, 5G networks, and other things where you don't want to have any lag time.
Interesting. Okay, one thing you didn't say was AI data centers. So can these data centers be used for kind of any purpose, including AI, or is that a special type or a new coming type of data center?
That's a great question. We can talk a lot about AI because I think that's really one of the hot topics. You can see AI applications in a lot of different types of data centers. So typically we'll see them in a co-location or a cloud type data center market, but enterprise users are using it as well. And there are different applications for AI, as you know, but interestingly enough, the AI applications are even used for all types of data centers to make them more efficient, as well as better notifications. So if anything's going wrong, you used to have these little sensors and they would light up, and that's when the manpower came into play and they would go fix whatever was wrong. Now it's really driven by AI, and that's helped streamline the cost effectiveness as well as the reaction time, helping these data centers get longer and more efficient uptime.
Perfect. I want you to address what makes up a data center. It's more than just a computer. Can you walk us through all of what's in a data center building?
That's a great question. No two data centers are exactly alike. And so each one will have its own special usages based on what the underlying tenant needs. But they do have some things in common. So they will have UPS facilities on site. They have backup generators, fire suppression systems, as well as water cooling and different chilling factors to help make sure that the servers themselves don't actually melt. If you can think about having your laptop sitting on your lap and how warm that might be, imagine servers stacked on top of each other and how hot that can be. So they do have some of those components that are quite similar. But again, if it were an AI data center, they have different applications in there, and so they have different needs. So it really depends on who the user of the data center is and how it's built out. But typically, those are a lot of the things that you would see in data centers.
Okay, thank you for walking us through that and kind of breaking that down. Okay, let's talk about latest trends in data centers and what's kind of fueling it to be such a hot sector.
Great. There are a ton of key trends going on right now in the data center market, one of which is hyperscale growth. I'm sure you've heard about some of the hyperscale data centers that they're building. Companies like Microsoft, Google, and Amazon are building massive data centers, like Meta's $800 million data center in Kansas City. These are very, very large facilities to use and back up a ton of data. So that's been a really large trend in the data center market. One of the things that's been most important, I would say, is the power and sustainability. Currently, data centers use about 1% to 2% of the world's electricity, and some like Microsoft are even exploring underwater data centers to improve efficiency. For me, servers, water don't seem to mix, but maybe the folks at Microsoft know best. But what's really interesting is the power is really the key limiting factor here. We're really hitting capacity on the power grid, and that's one of the key factors preventing future growth in this space. So I think in terms of trying to make things more sustainable, it's going to be very important for this sector going forward. We've also seen a data center real estate boom. Space near major hubs like Northern Virginia and Silicon Valley is in record demand, with prices soaring, especially in US markets, near 0% availability. With vacancy approaching zero, it's going to be very interesting to see where these new deliveries are going to come. We're facing a lot of kind of not in my backyard protests. You see in new markets, data centers use up a lot of power and they don't really bring a lot of new jobs. So when you don't have a lot of new jobs, there's a lot of municipalities saying that we don't really want more data centers here. And so it's been an interesting place to see where they will be going forward. But what I do know is that the existing data center supply will have a very big increase in rents going forward, given that there's really no new projected supply.
Is all of a sudden data centers going to limit the growth of IT and technology just because we don't have enough space and computing power?
I don't think so. I think with Moore's Law, where everything gets more efficient and smaller each year, we'll continue to see efficiencies in that space. And I do think that we'll find a way to have some new supply here soon. But what I do know is that as things get smaller and smaller, they do need more power to run. So even if you think about some of these AI applications, I find it pretty interesting that the average ChatGPT search uses about 10 times the power that a simple Google search does. So if you think about when you search something on Google, you type in your question, you get a bunch of responses, but you, the human being, actually has to go through each one and kind of come up with your own conclusion there. If you ask the same question to ChatGPT, in seconds, it will search the entire internet and come up with a very specific reply with sources in a matter of seconds. So just thinking about the difference between the two really kind of blows my mind. And if you think about it with how much additional data center requirement that is, and how much we're really only in the infancy of this AI, right? Think about ChatGPT, where 18 months ago, it basically didn't exist. And now they have billions of users worldwide that are using this daily. The demand is just astronomical.
So you're right. I'm using AI more and more all the time, and it's convenient, and I'm getting trained up on how to use it, but I really hadn't thought through the downstream demands on all the digital infrastructure. What other impacts are going on with all this usage and data and storage?
That's a great question. The volume of data created, captured, and copied and consumed worldwide is increasing at a compound annual growth rate of 35%. So before you think I'm just making up words, 1 zettabyte equals 1 trillion gigabytes, okay? And 1 zettabyte would take 1 billion average home computers to store. That stat just blows my mind. And in 2020, global data creation was approximately 59 zettabytes. By 2025, we are anticipating hitting 181 zettabytes. It's over a 150% increase since 2023. Which is just insane to think about.
Completely. Huge numbers. Gail, thank you for providing the overall perspective and all of those stats. Let's talk about why data centers make a good investment.
That's a great question. Personally, being in the real estate space and somebody who's been working in the data center market for over 10 years, I personally feel like it's a great real estate sector. But let's cover why data centers make sense as an investment. First of all, we call them mission critical infrastructure. Properties like data centers are absolutely essential to the tenant's mission and success as a company. In an internet minute, Amazon makes over $450,000 per minute. So if you think about how important it is for a data center to have 100% uptime, think about it in real life dollars. If Amazon were to have an outage, they would lose close to $500,000 per minute of that outage. Now that is something that could put a company out of business. So that's really what we mean by mission critical infrastructure. The tenants are usually very creditworthy, and we call them sticky tenants. Many tenants in data centers are Fortune 500 companies or national or regional operators. They have long-term triple net leases in place, which means that they have a very predictable cash flow for these real estate assets. And there are built-in escalators as well. These tenants put in a significant amount of their own capital. For instance, a data center that we bought for $13 million, the tenant just is working on a $90 million capital investment into that building of their own capital for AI infrastructure build out. So with those sticky tenants, high renewal rates, the average shell investment is $250 to $350 per square foot, while the tenant's investment in the infrastructure can be 2x or 3x that amount. And that's resulting in renewal rates for this industry typically north of 95%. This has been a very historically stable market. Data centers are, even as witnessed during COVID-19 pandemic, I would think we even use them a bit more. I mean, new technologies came out during that 2020 era that we didn't use before. Personally, as a mom, I could not live without Instacart. To be able to be here at a conference and to be editing my husband's grocery order at home, groundbreaking. So absolutely, the advent of some of the technologies during the COVID era probably had us using data centers even a bit more. These are a great inflation hedge with the annual rent escalators built into these triple net leases. It can help keep up with inflation. And typically very limited supply and skyrocketing demand. As we talked about before, new supply is going to be very close to zero here in 2025. And skyrocketing demand, we are not slowing down on our data usage at all. If anything, it's growing exponentially. So I would anticipate that we will continue to use data to a greater and greater degree.
So with all of this demand, we've actually heard the government talking about data centers, them needing more data centers, making data centers improvement. I don't know what they're thinking. Do you know what they're thinking, and how is that going to affect this marketplace?
They've cited putting billions and billions of dollars into this space through Project Stargate, but I don't know if anybody really knows what politicians are thinking at this point. I would anticipate that they would be bringing additional capacity to the power grid, which would really allow for private markets to come in and create new data center supply. I would hope that we'll see some programs go towards incentives for new data center supply and growth, as well as efficiency. I mean, to cool these facilities and to run them, the costs are astronomical. And while the tenants make good money doing it, if they can do it more efficiently, I think that that's a benefit all around.
Yes, I agree with you. With all of this activity and buzz around data centers, more people are looking to acquire data centers. How is that affecting the overall price of data centers and the overall potential return opportunity?
That's a great question. We're seeing a pretty large influx of institutional capital into the data center market, and that has significantly increased asset prices, especially on deals that have been bid out by brokers. We like to look for off-market deals. Our acquisition team has worked in this space for close to 40 years on the actual nuts and bolts of the facilities. So we work directly with tenants and talk about their future needs and really kind of help them with, again, their future needs and what they might need to grow. So we're looking for new facilities or older facilities that we could help them increase capacity to in terms of power and expansion. And so that's really how we're finding a lot of deals. But again, with the increased focus on this space, investors certainly can be paying a premium for valuations, especially for stabilized assets with great credit and long-term leases, especially in the sector with major cloud providers and enterprises like we had talked about before. Cap rates have compressed as competition has intensified, and that's definitely made it a bit more expensive to acquire high-quality assets. In the future, I think that pricing will depend on market fundamentals, and if demand for digital infrastructure continues to grow, typically driven by AI, cloud computing, and 5G expansion, I do think valuations will remain strong. But if supply continues to outpace demand or financial conditions tighten, we could see a price correction.
All of that makes sense. And you're right. You need to look for where is the value in the opportunity, not necessarily going with the crowd when making investment opportunities. Sometimes it is better to be a contrarian or find the value, even if it's in the hot sector. Gael, thank you for walking us through all these different aspects of data centers and data center investing in today's marketplace. And thank you for listening to another episode of Focus on Alternatives, brought to you by ADISA. Again, for more information like this, please visit adisa.org, and we'll see you in the next episode.